Hello, and thank you for joining this monthly update on AVI Global Trust. During December, AGT's net asset value per share increased by 0.4%. Performance was driven by a handful of holdings where our investment thesis played out positively. The largest contributor was Chrysalis Investments, our top position at 8.2% of NAV, which added 43 basis points as its share price rallied. Late in the month, Chrysalis announced proposals for an orderly realization of its assets, following constructive engagement with AVI, the largest shareholder, at 18%. We welcome this shift to manage wind down, though more work is needed on governance and incentives to balance value maximization with speed of capital returns. Chrysalis trades at a 30% discount to NAV, with key assets including a 1% stake in Klarna, where the lockup expires in March 2026, and Starling Bank, representing nearly half of the NAV. Starling's banking-as-a-service platform, Engine, secured its first North American client with Scotiabank's digital bank, a potentially transformational deal. The core bank is rebounding post-regulatory issues with a new ad campaign and optimism around its SaaS-like Engine pipeline. We see significant upside ahead. Other contributors over the month included Cordiant Digital Infrastructure, adding 23 basis points, and Young One Holdings at 17 basis points. On detractors, Vivendi subtracted 42 basis points, followed by Hyasun Corporation and Frasers Group, though these remain conviction positions. We also introduced our largest Korean holding, Samsung C&T, now over 5% of NAV after post-month additions. Korea accounts for circa 15% of the portfolio currently. Samsung C&T is the de facto holding company for the Samsung Group, with its NAV dominated by Samsung Electronics and Samsung Biologics. We bought Samsung C&T in June 2025 when it was trading at a 57% discount to NAV, attracted by the undervalued NAV, strong earnings growth potential, and the Korean governance reforms. Samsung Electronics, the world's leading tech conglomerate, was trading below book value amid HBM chip setbacks, but has since progressed materially. Its latest HBM4 chips topped NVIDIA and Broadcom tests, positioning it for 30% plus market share in 2026 amid shortages. Consensus forecasts pointing to 173% operating profit growth next year, yet it trades at a 55% discount to peer SK Hynix on price to book. Samsung Biologics, a contract manufacturer of biologic drugs, boasts 50% EBIT margins versus peers' 20-25%, thanks to scale in antibody production for cancer and autoimmune treatments. It's expanding to double competitive by 2032, with mid-teens earnings growth ahead. The new capital policy due end of the January 2026 should help narrow the discount. To date, the investment has delivered a 30% return on investment in local currency. AGT's strategy remains focused on undervalued assets with catalysts, and we're excited by the broadening opportunity set, particularly in Korea. Thank you for your support.